traders. Brock, how are you this morning? How's everyone doing? Well, the yen is broken out. Look at a weekly. So the yen completely disconnected to almost every correlation. So with this going on, yields usually would be going up. They've been going down. With this going on, gold would normally be under pressure instead of this, on the verge of making new highs here. 1611, almost there. So brings me back to a lesson that I've had to learn, quite a few times over and over again, that you have to trade each individual instrument like it's its own unique personality. You can still use the correlations for giving you an overview, but you can't marry it. So took some losses on yen finally. I can't buy this breakout, but I'm sure the guys are going to show potential upside here. I remember when Greg was here a week ago, he was talking something like 1080, 1070 while we had risk on. But even the S&Ps are up. But, you know, is this a failing rally in the S&Ps? And we had this from Monday night or Sunday into here. And so far, this could be a failing rally. So with the yen doing what it's doing, I'm surprised we're not at new highs. And gold, you know, like I've been talking about for a long time, looking for 16.25. We're almost there. You could see on the daily at new highs will be diverging, but I think short-term stuff is confirming. Yeah, look at that, the 4 hour, the 1 hour. Maybe this is drive 1, drive 2, a little pullback, and we'll see what happens at 1635. The major point I want to bring out when it comes to this precious metal rally, and it's something I suspected, gold is almost at new highs, right? And silver's way outperforming today, but when you look at the chart, silver put in its high all the way back in 2018, back here, and a lower high here. And with gold at new highs, we still haven't even taken out this high in silver. So when gold looks heavy, say for example, silver is underneath, this looks like 1885, which would be another 50 cents. May not even make that high, that this would be the preferred short because it's not making a new high. Everyone get that? So I'm not saying that it can't, I'm just saying it hasn't. And that's all I could do is go on the information that I'm being given now. You're always reassessing, but silver hasn't made a new high since when's it stayed here? It looks like September of last year. So we'll see. This could end up being a decent short. Gold might end up being a decent short. Steve had some areas up at 16.25 too. And last week, you know, I said, "Oh, I hope it gets there, you know, for shorting it." And he said, "Well, first we have to see if it's going to get there, and you know, we're a day away, and we're really, you know, for as far as government work, close enough to a new high here. I don't think this is the day to do it." I'm starting to look at EG. Talked about it early in the week. I still want to see this low taken out, which is 8277. Okay, thank you, Ride the Curve. Yeah, it's a failing, so far it could be a failing rally there. And But looking for this, look on shorter term stuff like the 4 hour. Now we have two, right? See, 1, 2. One more low should clean out that daily low that I just showed you. And this should start to turn. Really, it's been acting better than the euro. Look at the euro, straight down. Well, the euro pound hasn't been. But I agree with you. To me, this looks like this could be a rolling top. I have a lot of different speed lines. I have 33.30 and 32.5 down here. So we'll see. I'm still top picking S&Ps. See if Powell injects. Thank you, Ride the Curve, Glenn, Monica, everyone. If you weren't here yesterday, you know that we are looking for subscribers to beta test our EA on PIPs, pattern and plays. So if you are a subscriber, you could talk to someone in chat right here on our website, or write support so that you get these automatically through an EA. Okay. And I guess I'm going to see how Blake is doing today and what his thoughts are with the yen and where he thinks it's heading on a big day. I don't even know, Blake, what was behind the big candles. Something BOJ did?
Well, it just broke out. I mean, it's technically breaking out. So I look at I look at the dollar yen, and man, this move above 110 is a pretty big deal, above like 110.20. And you were talking about correlations and about it was really interesting to get up this morning and go, oh wow, look at gold is higher. I stopped myself out of the dollar yen. Because I just kept my stops tight and said, well, it's when you see the setup, it's like, okay, it's worth the risk reward. So I took the risk and I got stopped out, and it's like, man, now, looking at the dollar yen, it's like you have to be a buyer on dips now, and you just have to be, as long as it stays above 110.
Let's see your chart, buddy.
Yeah, hold on, let me get over here. So, now as long as we stay above 110, especially like 110.20, you gotta look to be on the long side. Yeah. This is a massive breakout. If you look on a weekly basis, this is really moving, and it's, we've kind of fought the yield move. It doesn't really matter if yields are moving higher or lower, gold's moving higher or lower. The dollar yen is breaking out now. Now, one of the things that's a couple tidbits of information, just talking to the guys in my office, and they're like, wow, everybody, universally is like, well, I wish I was long some. Unfortunately, I'm not long some, because, being long as it was knocking its head up against 110 is a little risky, because it failed there so many times. But now that it's above, if you think about like Japan, they're limiting movement in Japan from big spaces of a lot of people. What's that going to do to GDP, Japanese GDP moving forward? Then, you have like the Summer Olympics. How many people are going to be going to the Summer Olympics? There's all these stories that now are starting to weigh on the yen. And, with the rally and risk, I think the dollar yen might just now start playing some catch up. So that is it's a big development technically. So let's see what it does today. I'm going to see if we can hold above the 110, 110.20, 110.30 level. And if so, you might remember the 110.80 level from me talking about it last week, which would be channel high, but I think we can go a lot higher than that. Okay. That would be the channel high that, I was hoping for this break higher last week is what I was really hoping for. Okay. But
it was kind of anemic response in the S&Ps to this move in the yen. Yields look like they'll pop a little bit.
Yeah.
You got some news.
What's that?
You got it listening to some chatter.
Yeah. I was just listening to something really quick. Hold on. Because I was seeing futures come off just a little bit, so I was just seeing if there was anything that was causing, you know, a little bit of move in the S&P. But yeah, you know, the correlations as we know it have kind of gone out the door quite a bit as of late. You know, we were talking about uh, this in the chat room, that when you know, all these correlations kind of go out the window, we might be at a pretty big inflection point in the markets. Not necessarily today, but you know, here in the near term. But there are a couple things that I'm looking for today. First and foremost is the euro. I sent out I tweeted a chart regarding the euro and the multi-year trend line that we're approaching. That trend line comes in right around 107, you know, 30 actually. It's where it comes into. This is a 20-year trend line that's coming into play in the euro dollar. So just keep that in mind when you're dealing with the euro, that we've got this big trend line coming in down here. So it's just something to think about. Now the euro, to take any type of downside pressure off, we really got to get back above like 108 and a quarter, you know, back above these levels. But it is something worth noting. I also want to take a look at the dollar Canadian, because we do have Canadian CPI coming out today. As you guys may recall, I am looking at the dollar Canadian at the retracement at 131.80. That is a level that I've really wanted to be long the dollar Canadian. And post Canadian CPI, we might be able to get there. Hold on. Let me.
Yeah, good patience in letting the market come to you on this one, Blake.
Well, we'll see if it gets to me first of all, and then you know, let's see if it's even, you know, worth a shot. But that's what this market has been about, is letting the market come to you and, you know, taking your shots at it, right or wrong. And you know, I've got whipped around this dollar yen the last couple of weeks, just kind of playing. I played on the short side, made a really good trade when we first hit the 110 level. Then as it's been floating around the 110, you know, I've gotten in, gotten out, I've been long, I've been short, you know, like I've got whipped around through here, although making a really good trade out of it initially. You know, now I'm not short anymore, and now I'm just looking to be long. But you know, it's just trying to get the pullback. There's that's the, you know, kind of the key to this market when you're in a really low volatility environment, is just trying to let things come to you. And right now, you know, I look at the euro dollar, other than, you know, wanting to be long the euro, maybe somewhere down here if we can get it at 107.50. It's hard to play it yet. But yeah, all eyes are on the yen. One of the other things that I think we should note about the yen, we had a big move off the 618 in the euro yen overnight. I wasn't looking at it last night because I was, you know, focused more on the dollar yen, but the euro yen really hit the 618 yesterday, and we've bounced pretty aggressively. And if the euro is trying to find some sort of low around here, and the dollar yen's breaking out, then that means the euro yen, you might be looking at something like this, you know, as a possible long in the euro yen if you can get any type of dip below like 119. So that's something else that you can think about. And you know, with the dollar yen breaking out, you obviously have to start keeping an eye on all these yen pairs, whether it's the guppy, the Aussie yen, you know, which the Aussie yen might, you know, this might actually be a decent play as we've been consolidating here. So, you know, this dollar yen's a big deal. This is it's a pretty big deal in my book, especially depending, you know, where we close today. As long as we close above 110.20, 110.30, I don't see why the dollar yen can't go a lot higher. What'll be interesting to see is what happens with equities here, if equities continue higher as well. One of the things that kind of tipped us off yesterday that the dollar yen may break higher is that the S&P didn't sell off. And matter of fact, the NASDAQ came roaring back. I mean, we're back at all-time highs again in the NASDAQ 100, following that news out of Apple, which is pretty stout, I would say. no pullbacks to be seen. Any pullback is being bought, and it's making for a very, very, very hard to trade market because it's just a very one directional market. We're not getting any type of extreme, any type of pullbacks here. But I'd like to hear from my colleagues Steve and Stelios and see what they have to say about this yen move, because this is a big one. Stelios, are you here this morning?
I am. Good morning.
Good morning. So what do you make of this big move out of the dollar yen?
Well, like you said, this is a technical breakout, but I always go back to the those horrible GDP numbers from a couple of days ago, and what I think is coming due to the virus and the slowdown in China and everywhere. So I think the future is not bright, and I wouldn't be surprised if this move continues. I mean, it will depend on the dollar as well, but given what we know at the moment, I think this break is quite important, and I agree that as long as we're above 110, you probably want to be a buyer of this pair.
Yeah, the other day, 2 days ago, PM in our chat room was saying, China, this Japanese GDP number is horrendous, and I'm like, yeah, when's the last time we've really? And I dismissed it. I'm like, yeah, when has the market really paid attention to, Japanese economic data? I mean, I could really go back the last 15 years, and the market's really just brushed off any horrible Japanese data, period. But really, maybe this is the kind of the nail in the coffin for Japan, because it's, and I'm no pun intended when I say that, but with the coronavirus, as you're talking about, being such a big risk to Asia right now, and like I said, Japan, they're limiting movement of people into big congested areas. What's that going to do to the Japanese already suffering economy?
Yeah, I agree.
Right?
And I agree when you talk about the numbers, the market actually ignoring numbers, but this was a huge miss, and it's not just the miss, it's what's coming. I think that's the main issue.
Right. And so now, do we see a bigger, like, tectonic shift in the way that the yen is traded now, now that we're breaking out? Is it going to be as sensitive to yields? Is it going to be as sensitive to precious metals? I mean, you look at gold. Typically, gold and the yen have had a very divergent. Actually, let me take that back. They've had a very strong relationship. Stronger yen, stronger gold. Weaker gold, weaker yen. That type of thing. We've seen gold break out and break out higher, and this is a massive move in gold that looks like it's going to continue. Is it eventually going to weigh on the? Is it going to strengthen the yen? I don't know. Based on what we're seeing right now, it doesn't look like it. It doesn't look like it at all. So I know you're still you're still bullish precious metals. What's your flavor on silver? Dale had mentioned that silver really hasn't participated in the rally that we've seen in gold. I mean, silver is, not even near its 2019 highs, where gold is almost there. Well, actually, we are, at fresh new highs. So what do you make of this gold versus silver move?
Well, if you look at the ratio, it's still at 87.5, which is very high. So that means that, and we do know as metals rally together, this ratio goes down because silver usually moves more than gold. So I am still long silver. It's my biggest position anyway, and I've had it for a couple of years now. But I still believe in the trade for both metals. Remember, gold has made all-time highs in pretty much every currency except the dollar. And given the liquidity that's being added everywhere, repo in the US and the ECB probably doing more QE, and rates really not going anywhere, at least not higher, I think, in the near future. I don't see a single reason why metals shouldn't rally, apart from obviously day-to-day market forces. You do get moves, here and there, and you get these sudden selling orders which come in, usually big size, but apart from that, I really don't see any issues with the precious metals going higher. So yes, I like that, and I like silver more than gold because, like Dale correctly said, it hasn't yet participated in this rally.
Yeah, you know, I wonder when the time is going to be where silver actually does participate in the move and start, you know, following gold more on a closer basis. And you know, just looking at it technically here, I would probably venture to guess that if we break this
20-ish, I think, or something like that, 19.5, 20.
Yeah, you know, 19.5, 20, you know, we start getting above those levels. I think that'd be pretty bullish in silver. You know, which would be also what I guess the other question that I've got regarding precious metals is gold and the dollar typically will trade inversely. So will or precious metals. So will this move higher that we see in gold and silver, will it start to weigh on the dollar eventually? That's one of the questions that, you know, that does resonate, since, you know, correlations haven't been working, but if there's one true and tried correlation, it has always been precious metals and the dollar, at least on a longer term basis. But we've just in recent days, we've seen gold go up, dollar go up, and stocks go up, which is again, this is one of those you know, strange phenomenons that's been happening as of late. Let's see if Steve is in here and wanted to, you know, share some comments about what he feels about these precious metals.
Hey, Blake.
Hey, Steve, how you doing?
I'm good. How have you been?
Good. Just woke up to like a, you know, kind of a shell shock. What the hell just happened to the yen type of move?
Yeah, it was, you know, it was a binary thing. It would either get, you know, spectacularly rejected after testing that trend line resistance for so long, or, you know, break through it and keep on moving, because obviously, you know, a lot of people that were trying to play the other side, and, you know, I can understand why. I mean, the risk reward was amazing, and, you know, it worked out a few times. You know, those people have had their stop losses up there, so, you know, that was a trigger enough for the pair to, you know, to move substantially higher. Substantially, definitely not substantially with historical norms, but, you know, with what we've gotten used to having as USD yen volatility, you know, during the past few years, you know, it's producing a decent move.
Yeah. This is I mean, you think about the tight consolidation that we've seen in the dollar yen in the last, let's just call it the last 5 years. I mean, you know, we've tightened in a really wound up range, and maybe this is the start of some bigger volatility to come. This move, in a sense, kind of reminds me of the euro dollar when we were looking at the euro at 112, and everybody's like, "Oh, it's going to rally," and then it failed. You know what I mean? We had the euro that looked like way back here.
Yeah.
Everybody
and then it
was
accelerated lower. Yeah.
Everybody was really bullish, and then all of a sudden we broke and accelerated lower. This is kind of reminiscent of that. I think it's more of the you know, the feeling of, you know, everybody. I got an analysis from Citibank today, which asks the question: is this the big one in the dollar yen? And, you know, I get a little nervous when Citibank starts sending things like that. So that's just something to think about, because they sent a very similar analysis on the euro dollar when it was trading at 112, and it was looking to break out as well. So
yeah, personally, you know, might be stupid. I've been trying to keep myself trading, you know, based on technicals only, and using my fundamental bias to just help me adjust my leverage. So, you know, when something is technically pointing to the same direction that my fundamental bias is, I feel more comfortable, you know, pushing more than, you know, the opposite.
right.
I might regret doing so, but I don't intend to be buying this USD yen move. I do understand and accept that I might regret doing so, because yes, it looks like a very valid technical break to the upside.
Right.
But what I wanted to say before you even started asking questions to Stelios and I, is that these type of divergences that we see all over the market, and these type of decoupling that we've seen from well-established correlations, they scare the crap out of me, because I don't believe that this situation is sustainable. I believe that both stocks and the dollar are in la-la land. I do totally accept that this might go on even for months to come. So, it's not unlikely to see the situation get prolonged even further. But I don't want to be the idiot getting trapped in the wrong side of this market, because when it snaps, I believe it's going to be spectacular. So I'd rather participate in other things that make more sense to me, and let other people make money there. At least I can sleep easier at night. That's how I think about it.
That makes a lot of sense to me. All right. Well, what we've got here in just a couple minutes is we've got Canadian CPI, and I'm going to turn it over to you guys. But before I do so, remember, if you guys are ForexAnalytix subscribers, you can
premium subscribers.
What's that?
Premium subscribers.
Premium subscribers. Sorry. Yeah, and I didn't say that yesterday just because you have to have the Elliott wave and harmonic analysis, but you can do you can beta test our automated patterns in play for ForexAnalytix. If you're interested in doing so, email us at support@forexanalytix.com, or you can just go to when you're logged in, you can go to this little conversation icon right here and tell our staff that you want to be part of the beta test group for the automated patterns in play. So with that being said, and don't forget to visit Forest Park FX, our webinar sponsor, especially if you're looking for a broker, you feel like you're not really happy with the firm you're using. Make sure you reach out to them. You can get to them right via Skype or email right through here, and then tell them that you came from the FACE webinar. I'd appreciate it. The team would appreciate it. And with that being said, guys, I'm going to pass it over to you. Good luck today. I'll see you guys on the daily roundup webinar. Remember, we have inflation data in the US and Canada coming. We have both Canada and US inflation data coming up here momentarily. All right, guys.
Yeah, PPI, Production Price Index. Yes.
Yep.
Thank you, Blake.
Thanks,
Thank you,
guys.
Blake.
Good hunting,
See you
Blake.
later, mate.
Hello, guys.
Hey, Dale. Hey, Phil.
Oh, Steve.
Is it Friday yet? Okay.
Halfway.
You know, my son keeps, in essence, indirectly asking that every day since Monday, because, he knows that he gets to spend more time with us during the weekend. So, every day starting Monday, he's asking me, like, is mommy going to work tomorrow? And I'm like, yeah, of course. It's like Tuesday, for example. Okay. Then next day, is mommy going to work tomorrow? When's the weekend,
Yeah. All right. So we have a minute and a half until the numbers. So what is there to mention data-wise? We had some numbers out of Japan, not that important. Swedish, we don't cover Sweden here at ForexAnalytix, but it's always a nice thing to look at, because we've said before, dollar Sweden, the FX pair usually leads the way. They had CPI came out much weaker than expected, 1.3% year on year versus 1.7%.
Since you mentioned it, here's the USD SEK.
Interesting, because inflation in Norway ticked up by the same amount, and inflation in the UK today actually came in stronger. It came in at 1.8% year on year versus 1.3% the previous reading. So inflation kind of picking up in a few places. Oh, that's the dollar krona, Swedish krona chart, right? So we're still in the channel. So we're still in the channel. Okay, interesting. So we had that out of
PPI was also like a lot stronger in the UK.
Yes, it is a volatile number, but it was
expected to be a negative 0.4, and it came in a positive 0.9 month on month.
Yes, that's correct. So some more encouraging numbers from the UK. Okay, let's look at the numbers.
Yeah. That's why I switched.
So
There we go.
US data is good.
Numbers are
It's all
coming up.
green.
Core PPI is 1.7 versus 1.3 expected.
Canadian
PPI
data.
2.1 versus 1.6.
Yes.
So yeah, PPI data a lot stronger than expected. Housing starts somewhat better as well.
Yeah, it's all better data, and the Canadian inflation 0.1% better. Actually, not
Canadian CPI, yes,
CPI
0.3
is,
versus 0.2,
yeah.
2.4 year on year. I mean, the vast majority of these economies that supposedly and until recently were looking for price stability and, you know, inflation below or lower 2%, they've now consistently been producing inflation above 2%. Of course, you know, I consider it unlikely that they're going to be doing anything about it, because having to do with inflation, they're all bark but no bite. And the reason is, and that's also the reason why they pretend that this increase in inflation is okay, because if they didn't pretend it's okay, the market would expect them to do something about it. But there's going to be a huge trade-off. When the time comes that they will actually need to fight inflation, they will need to tank the economy the way things have become now with debt and everything else. And you know, between the two of them, we always know that they will be making the political choice, which is, you know, ignoring inflation and, you know, supporting asset prices and, you know, indirectly somewhat the economy.
Yeah. By the way, the building permits number in the US, highest reading since 2007. And if you look at the chart, it's just upward sloping from 2009 onwards. So housing doing pretty well in the US.
Mm-hmm. Yeah, it had, like last year, it had, you know, quite a big turn lower when we had monetary tightening, and, you know, magically, you know, with monetary easing resuming and at a greater pace than ever.
Yeah.
You know,
surprise, yeah.
Surprise, everything, you know, got restored to, you know, what they wanted to be.
Yeah. Okay, what else? I mean,
what else did we have?
The main thing, data-wise, that was it. The main thing really on my mind, it remains coronavirus and how this is going to go. We've passed 2,000 deaths now globally, although a big chunk is in that cruise ship, which, you know, at least it's contained there. But
yeah, on a cruise ship, you can say it's contained.
yeah, but you know, I read headlines. Obviously, I'm not there, but I read headlines, and I'm still worried. You know, I read yesterday. Apparently, the head of this big hospital specializing for coronavirus victims, patients,
died.
Yeah, he died in Wuhan, and it's like, this kind of stuff scares the hell out of me. So, you know, the markets think it's all over. I'm still not convinced. I hope I'm really, really wrong about this, but I don't.
Yeah, you know, and one of the things that make it really scary, if you think about it, when doctors die, etc., is that the vast majority of deaths to the outsider are just anonymous numbers. You know what I mean? So you can assume, if you want to be optimistic, that it's old people and, you know, babies and young children, anyhow, parts of the population that are, you know, susceptible to being weaker.
Yes.
But when you see, like,
this guy was 51 years old. And
exactly, when you see doctors aged 30, 40, 50, which, you know, since they were active doctors, that, you know, they were people, you know,
yeah, they knew how to protect themselves. You would
functional
think.
people, obviously with good immune systems, because when you work all your life in a hospital, or when you work all your life as a nanny, for example, with children, you get quite a strong immune system, right? Because you come in contact all the time with viruses, so your immune system, you know, gets quite tough. So when you see people like that dying from something that they want to present, that it's like a little bit of an enhanced version of the seasonal flu, you know, it gets you thinking, right?
Yeah.
Well,
I mean, how many
remember when
doctors
it
do
broke.
you know that have actually died from the seasonal flu?
I remember, you know, Steve Volke, when I said you know, right away when it broke, it was, you know, it was genetically engineered. And you go, oh, it was on Skype. Remember, Steve? The first thing I want to hear on a Monday morning is another crazy conspiracy theory.
If you remember my analysis, which remains exactly the same, was the following: that I don't want to give merit to conspiracy theories because there are only two certainties about conspiracy theories, and I'll repeat it exactly as I said it. Reality number one, some of them are true, unquestionably. Reality number two, the vast majority of those aren't. So, it's not productive for me to try to analyze and, go into,
what do you think now?
The same thing as I thought back then.
Yeah.
First of all, does it matter if it's man-made or not? No. I mean, it doesn't really matter to the outcome. It doesn't really matter to how it evolves. It doesn't really matter in, what happens or how it affects the economy or how it affects society or human lives, right? I mean, whatever it is, man-made or just, a natural, variation or whatever, that's all that's all in the past now. It has happened. So now it's in the loose.
Okay. And I guess you could say the same thing about Hiroshima then.
I mean, because there is no question about Hiroshima. Hiroshima was not a natural.
It was a conspiracy
event. It was not a natural event, right?
Yeah. Well, anyway.
Yeah.
This feels like the slow-moving one.
Although there is a lot of argument that can be made that the tragic events of Hiroshima and Nagasaki, in the grand scheme of things, actually saved a lot more lives than ruined, right?
Yeah, that's how we rationalize it.
Because the global, because the World War might have continued for another couple of years, and we know that every year, there was millions of lives being lost on the battlefields. So, anyway. But anyhow, let's leave that to historians. Yeah.
Okay.
Anyhow, so obviously the main event is the breakout from the USD yen. Now, if you're looking for a resistance here, and this wedge I had on my chart since many days ago, if you're looking for resistance, we're currently testing the first area of resistance because it's the confluence of the 78.6% fib of this last move lower and this wedge's trend line resistance. So 110.70, there we are. First area of resistance. Above that, 111.50. Now, today's daily close is going to be very important, obviously. It looks very likely that we're going to close in breakout territory. As I said before, I'm not going to be chasing it higher, but that doesn't change the fact that this is going to be, if confirmed, a legitimate breakout, and it might have like big implications not only in the USD yen but in many affected pairs. For example, if we want to go into detail, one of those I like the most, and I said it even since last week, the one that looked better to me if the USD yen was to break higher, was the Guppy. Because the Guppy, oppositely from what other yen pairs had been doing, didn't break down. It actually ended up coiling in a symmetrical triangle. You can see it here. And, we've moved above it. We came down. We retested it yesterday at the lows. And now we seem to be continuing to the upside. So I have to say that, the Guppy looks quite appealing to the upside against yesterday's lows. I think we might see more upside here. So, if you're looking for a yen pair to be long, I think the Guppy is a very decent candidate. Now, I would be a lot less keen to try to play reversals in yen pairs like the Aussie yen and the Kiwi yen, and the main reason is because, as you can see here, the Aussie against the US dollar is looking very bearish. For the time being, I see a triangle, a pennant, after that move lower, and it looks to me likely that it's going to continue lower. So, trying to play long the Aussie yen, here it is, the Aussie yen, by the way, it's like trying to guess which of the two is going to be the weakest, the Aussie or the yen. And, as I've said multiple times, why try to, assess, weak against weak, which is going to be the weakest, or strong against strong, which is going to be the strongest. You'd rather find, you know, something strong to be long against something weak. Here's the Kiwi yen, same deal. Kiwi yen, I said yesterday, this looks like a range to me, and an eventual breakdown from like 69.90 is going to lead to more losses. So we have had a rebound today, but you know, have we achieved anything? No, we're back in the middle of this little range. So in essence, you know, nothing bullish to write home about. So big reversal though in the euro yen. Euro yen found support exactly at the 61.8, and like huge daily candlestick today. Having said that, be careful, because this 119.80 to 120 area is resistant. So I wouldn't be like, you know, jumping the gun and being long unless we can actually clear that level. Until that happens, I think we might even get rejected from there and move lower. As I said before, anyhow, pound yen looks probably like the best bet if you want to be long a yen pair. Now, I very rarely tend to look at pairs like that, but I have to admit that another decently looking pair here is the Swiss yen, because you can see it here. Let me adjust what we drew like several days, perhaps weeks ago, because this looks to me like a pennant which is about to break higher. Now, the big picture here is this down sloping channel. We've moved substantially after retesting support here, and you know, zooming in, this looks to me like a textbook pennant. Nice reversal higher today. The Swiss continues being under pressure. Here we see the yen diverging against many of its usual correlations. Blake already mentioned the correlation with gold, but we also have another traditional correlation. Usually when we see the Swiss being well bid, you know, the same, because it's like a traditional safe haven, you see the same type of behavior from the yen. Perhaps it's also due to the coronavirus, as Blake mentioned, that, you know, that makes sense. Perhaps it's just part of the story, but in this case we see Swiss continuing to be very well bid, while the yen is breaking down, or the USD yen is breaking higher if you want to look at it against the US dollar. So Swiss yen looks like a good candidate for another break higher from this 112.50 area, in which case I think there is another 300 pips of upside here until we actually can find ourselves back to retesting this channel. So Swiss yen looks decent, and it also has the benefit that it's not affected by you know, the dollar, for example. So if you're uncertain about what you want to be doing with the dollar, that is definitely a currency pair that, you know, wouldn't care at all about, you know, what the dollar is doing. Now, having to do with the Euro USD, keep in mind that the Euro USD did test at the lows yesterday, and same deal at the lows today. This confluence of supports at 1078. 127% extension of that last rebound higher. Also horizontal support resistance area if you go back. There is also, as mentioned yesterday, a nice gap to be filled at 1073. That might also do the work. Bottom line, you know, quite a big move for recent standards. It's actually not a big move. I mean, you know, in the past we used to have moves like that happening a lot faster, but anyhow, for today's standards, quite a big move lower from the Euro USD since the end of December. One more example of, you know, seasonality. We actually found a high at the end of you know, last trading day of the year, and you know, since opening January 2nd, the Euro USD has only been producing like lower lows. Having said that, I think that, you know, with the RSI being oversold at anything from the daily and, you know, below in time frames, you should start being a little bit careful, because some type of reaction, some type of rebound from here, you know, towards 109 is a likely scenario. So, you know, if you haven't been short, I would really advise against trying to chase this move, you know, at this point. Now, let me go through some of your questions. How about bestseller CAD yen? I just, my eye fell on the last question, but since I was talking about the CAD pairs, I'm going to jump on this. So CAD yen is the same deal, week against week. Let me pull the chart and I'm going to show you what I mean. First of all, quite a big move today higher, because today specifically, we've had both the Canadian dollar strengthening and the yen weakening. That's why we see this big of a candle. Be careful though, because as we speak, the CAD yen is retesting these ascending channels, trend line support as resistance. So, let's see what happens from here, because this is definitely an area that might actually act as resistance. If it does, nothing has really changed. I can still see the appeal for lower levels in CAD yen. So that's what I think about it. So let's see if we can manage to move above this area, and then we can reassess. What about sugar? USD BRL, crude. Okay, let's take them one at a time. So crude. Crude yesterday had a very bad day until a point, and then it completely reversed higher. Actually, more or less, it shared the price action that we saw in the Nasdaq. So at some point, it was significantly lower, and then closed more or less unchanged. So we see a continuation higher, but that goes to the weekend analysis, which I read to you yesterday. I'm still negative crude as long as we trade below 55. So as I was saying yesterday, I wouldn't rule out a stronger rebound higher. Actually, my initial assumption was that we would see a stronger rebound higher, but yesterday's price action from that trend line got me thinking that perhaps that's all we're going to see in this rebound. But as it seems, that was a fake turn lower. Now I would be looking for opportunities to be short crude again, anywhere between $54 and $55. So that remains my thesis here. So I want to be short. Do I want to be short yet? No, not yet. Your other question had to do with sugar. Remind me, what is the ticker for sugar? Oh, this is a CFD. Okay, so we have a CFD for sugar. There it is. Another example of what I was talking about yesterday as well, having to do with tangible commodities, that usually when prices become very oversold, the upside is asymmetrical, and you can see it here. I mean, sugar had become once again extremely cheap, and since it's a tangible commodity with actual, last time we had a look at that, though, that was a good trade, was, from what I see from the drawings, was back then when we had that pennant that played out very nicely. We now seem to have created a bottom here. We built a bottom information, and this starts looking like an impulsive move higher. So what about sugar? I think you should be buying dips in sugar. So I don't know if you're going to be lucky, but I think back down here is a nice buying opportunity. Let's Fib retrace this.
DSI has been in the 80s for quite a while on sugar.
Yeah, I mean,
I thought it would have been much higher, because I remember talking to Michelle Schneider about it. And what's that? You have the daily up there? Yeah. So a lot of bullishness on this breakout. So
yeah,
I wouldn't chase it.
No, I wouldn't chase it as well. But if you get lucky and get something like that, definitely.
How did the grains look, Steve?
Do you know ticker?
S for soybeans, W for wheat, and C for corn.
soybean S1, is it S futures? Yeah, S1. Let's see. Ooh, huh. Doesn't look good, right?
What is it?
Isn't it soybean? Didn't you say yes?
Oh, I don't know what that is. Soybeans, I don't know. They're not $2. Yeah, so I'm not sure
Okay.
what the symbol is here on TradingView. Wheat
Let's see
futures.
CFD and wheat, for example.
Yeah,
Wheat more or less the same deal we
it's
had with.
constructive.
Yeah, it is constructive after building a base down here. Although I have to say that, oppositely from the chart we were looking at before, even this move higher doesn't look that constructive as it looked there. So I have to be less bullish in what I see here. I mean, look at this.
Yeah.
I mean, have we moved higher? Yes, we have, but it's more in an overlapping manner. So
Looks like a big ascending triangle. If we start closing above these little double top that we have working right here, that would look good.
yeah, above 580, you mean?
Yeah.
Yeah, but I would want to see some more pickup in momentum as well. SB, our friend is saying here, SB, yeah.
Oh, I had sugar.
No, actually, that's sugar.
Yeah.
ZW.
Soybeans.
Yeah, wheat futures.
Because China.
There they are. You see, that's what we had charted actually the last time.
Yeah. Okay.
Yeah. So we might actually make it to the top of this. We might actually make it to the top of this channel. I mean, that might have been a triangle. We broke above it. So we might now make it on top of this channel. But I don't find this price action impulsive in any way. I have to admit. Soybean futures, ZS. Okay, let's have a look at them. Here it is. Same deal. Same deal. I mean, has built a base, has been moving higher, but I don't see this move higher as impulsive. So, we might have more upside, but I'm not really that enthusiastic about it. What about oil? We already talked about that. USD BRL. Okay, we're going to some of the exotics. So USD BRL, here it is. At highs, right? At highs. So, be careful here because the car is definitely against you. So, you want to be long, which it makes sense because for the time being, we're in breakout territory. There's no question about it. But keep in mind, in order for you to make money here, you need to be, by being long, I mean, you need to be long, at a period that this moves substantially. As you see, USD BRL was at 2011 at 150, and it's currently above 4. Of course, a chart that looks a lot like it, but it's even more extreme, is the USD against the Turkish lira. Because back in 2008, it was at 1.14, so Turkish lira was almost as strong as the dollar, and it's currently above 6. Same deal here. You have a very, very good carry trade if you want to be long the Turkish lira. So if you want to be short this pair, you're going to be bleeding money out of your ears if you want to be long. So being long and having price move in your direction slowly is not going to do you any good here. So you'd rather make sure if you want to be long these type of pairs that you've actually caught a part of the move that it's accelerating higher. Otherwise, you're going to find yourself in trouble because you're going to be paying every single night, to just be holding long. My pleasure, Bob. What is worrying about coronavirus's first death in Africa, Egypt, says Enrico. Actually, didn't know about that. In Africa, capability to contain is much, much, much lower than Europe and China. Unquestionably, that is an excellent point, actually. Yeah, I mean,
people worried about India too.
Yeah, structurally things are much, much weaker, and governments are a lot less likely to be able to contain things. So yeah, it's going to be devastating if we have a pandemic or a big epidemic crisis in these type of countries. You know, that's a very
especially
valid
if
point.
the locusts that are flying around blotting out the sun in Africa, their wings spread it around. Sorry, I just feel like we're in the middle of Revelations.
By the way,
Locusts.
Good for reminding me. Palladium got 2.7K last night, right? No, actually.
How did locusts remind you of Palladium?
Look at Palladium. No, the question reminded me of Palladium. Just look at Palladium. Just look at this massive breakout once again. We moved from 2.5K at 2.8K. So we're talking about in like 48 hours, we had a 13% move higher in something that has already done this. I mean, I have no words for Palladium. It's like the epitome of like a vertical move.
Tesla.
No, Tesla looks like, like a joke, in comparison to Palladium. And if you want to actually have a visual representation of that.
Oh, yeah.
If you actually go back in time there.
Yeah. Look how correlated they are.
They are, but I mean, it's actually, they don't fit in a screen, so you can actually see it, but yeah. Anyhow,
let's show this chart in a maxi theater so we could get all get the the big screen theaters.
You could
show the whole string. Huh?
The fun part with the positive correlation between Tesla and Palladium is that probably the only thing they have in common is the proportions of the bubble. Because think about it, coach. One of the main reasons that Palladium has been racing is because of the standards for catalyst becoming, even, more strict, right?
Yeah.
But the whole concept that Tesla and electric cars are going to overwhelm the market and take a big chunk of the consumer's demand goes contrary.
Yeah, because you wouldn't need catalytic converters.
Yeah, exactly. Because if actually you believe that electric cars are going to become, the main attraction to cars in a very short period of time, which would excuse somewhat such a move from Tesla, then that means that demand for Palladium would crater, right?
Yeah.
Because if we started producing mostly, let's say, electrical cars within 10 years, then why would you need so much Palladium anymore? Because, you would need to build significantly less catalysts for cars.
Maybe it's a supply issue too.
Yeah, but up to which extent?
Yeah. Okay.
Because you can say it's a little bit of a demand issue, it's a lot of a demand issue, it's a little bit of a supply issue, etc. But fact remains that just 4 years ago it was at 460 and it's currently at 2.8.
And that was high. I remember it under 100.
Question. For the price to go from 450 to almost 3,000, right?
Yeah.
So we're talking about a 6-fold increase. Question, has the demand for cars increased 6-fold in the last 4 years? Actually, I doubt it has increased at all.
True.
Right. So
maybe this is the unwinding of what precious metal people have been talking about for years, and that's the paper market in precious metals, where all this selling came in to cap prices in all of these, and they're just being run over, all these paper shorts, forever now.
Definitely, at the very least, this increases volatility substantially. Yes, there's no question about it. Now, to what extent, unfortunately, we'll never find out exactly. You know what I mean?
Yeah. Jim Sinclair used to talk about it. That's why they opened the Singapore exchange in gold, because it's a cash and carry exchange. It's not just paper. So, you know, it's about emancipating the physical market from the paper market. That's why they did that.
Definitely, the paper money,
Paper
in
market.
my opinion, distorts things a lot. And the easiest thing to understand that is the following. For gold, for example, which is obviously, you know, the most liquid of those markets having to do with, you know, metals, the amount that is exchanging hands on the financial markets is multiple times the amount of gold we have on the planet. So you understand how much that can distort price action. I mean, when the paper market is of you know the size of the physical market, like times 100 or whatever, I don't know. Obviously, you know, it's, you know, that's not really normal, right?
Right.
Imagine what's going to happen when shit hits the fan, and at some point people start asking, or if people start asking for physical delivery. Imagine what kind of a squeeze is going to happen in the gold market, for example, or in the silver market. So imagine if all those future positions, instead of being settled, you know, people start asking for one reason or the other delivery.
Yep.
You know, there's not enough gold to cover that. End of story.
So I'm
So we
waiting
have an
for our
interview today.
guests. Yeah, we have Steve Anton. He said he might be a couple minutes late. So if you want to continue, I'll let you know.
Okay,
Or-
sure. What do we think USDMXN is doing with COT positioning at somewhat extremes? Also, why the relatively high rates in MX? Because if they didn't have high rates, the Mexican peso would have been demolished. That's why. And it also has to do with local inflation, of course. So it has to do with real rates. Now, the USDMXN, since you're asking, definitely remains under pressure after breaking through this you know, multi-year symmetrical triangle. But having said that, if you zoom in, you'll see that first of all, the downside momentum has stalled, right? As RSI is clearly very substantially diverging on the daily. I mean, previous low here was below 30, so in oversold territory, and the current low that we found like at the end of last week was with the RSI being at 37. So I think you should be a little bit careful here, because at least in the short term, if we do break out from this descending wedge, I think that the USD-MXN can easily squeeze back to 19. So despite from a technical perspective looking good for more downside, in the short term, by seeing those two signs, one on price itself and the other one on the RSI, I wouldn't be holding short positions here. I would probably, you know, if I had sold the breakdown from the triangle, I think this would be a nice place for you to take at least, you know, partial profits, you know, to protect your trade.
Okay, our guest is here.
Okay, perfect.
All right. Thank you very much, Steve.
Thank you, Coach.
Okay, Pivot King. Gonna get you all set up here.
The answer to our friend Danny Ruda, if a big position is taken, will it reflect instantaneously on the price action on the chart or after a few seconds? The answer is usually after, you know, a second or so, on average, let's say. So almost instantaneously, almost.
Hi, Steve. How are you?
I'm good. How are you?
Good. It's too late to say Happy New Year. I hope 2020 is off to a good start for you, though, my trading warrior brother.
Yeah, it is actually.
Okay, so if you want to share your screen, I don't know if you've used Zoom before. There's a little green box on your drop-down menu that says share.
What do you want? What do you want me to share?
Okay, well, we could just talk. I thought maybe you know, you might want to show a few charts, so that's okay. Either way, why don't we just get into, I know that you've been delving into mentoring a lot, you know, more extensively lately. So why don't you tell me what the toughest thing about teaching people how to trade is for you?
Oh, uh, it's going to
And
be
the list can't be longer than 10.
it's going to be a long answer. Okay, let's go through some things. Number one, depending on what you trade, what I've seen live in the forum actually is a lot of people rush to. A lot of people that are getting into trading now don't understand how difficult it is to trade. Number one, there's a lot of misinformation out there. So what happens is a lot of people read a lot of books, they listen to a lot of people, they spread themselves with so much information, so many indicators, and they're looking for that holy grail. That's what I think. Well, not what I think, what I know. So what happens is they get to learn all this stuff, not to put down other courses or anything that I've seen on the internet where there's thousands of hours of videos of training, information, examples, the regular stuff, the MACD, RSI, and this is what you need to do, and this is what you need to do. So they concentrate on just huge amounts of information, which, as you all know, there's tons of information online. There's tons of information they cram in a course, and what happens is there's so much data, so much information that everybody gets confused. So when they actually start to trade and start to look at these markets, they might get a couple trades right. And depending on what they've learned and how much knowledge that they've learned, they make mistakes because they don't put the time into actually practice and watch price, which I pound the table. You have to watch price. You have to watch the security you trade because each security trades different. Nat gas trades different than oil. There's times they like to move nat gas different than oil. You get to pick up things when you watch price. There's little tricks I have with nat gas. I don't want to say them, but not just with nat gas, with oil. Like there's specific times you can see them make a high on the close, and it's just so the pattern's always there. So
okay, so you really can't teach experience. You have to really put in the time, screen time, and that's going to take many seasons of trading to be able to recognize each market's individual personality, isn't it?
Yes, along with basically the strategy that you use. Everybody has I have a strategy that I shared with the people in the forum. Of course, you have to drive your own car, but you know it works for me and it's working for a lot of people on the forum. But I pound the table where these people have learned so much stuff along these. There's a lot of people there that have been trading for 10 years and they're on, they're off. And a lot of them weren't profitable, and hopefully they're profitable now. But what I find is a lot of people rush to get into trading, like they'll learn. And what I find is, especially when they come on to my site, which has been closed for a year and a half, what I found was a lot of them had to undo everything they've learned. And what they did was, well, what I suggested. And what my course teaches is to basically keep it simple. Because honestly, Dale, when I kept it simple, it started working for me. I used to try every indicator there possibly is. And that's how I came up with my own way to basically give me a lever of where the market's going. You know, I'm going to wait for this. I do a lot of waiting, Dale. Like I'm patient like you wouldn't believe. And that's another thing. A lot of people aren't patient. They'll stick in front of the screen. They'll stay. They make it look like if they stayed in front of the screens for 3 days, which I do, and you put all those hours, they're forced to make a trade because they think that all the time they put in watching price for a setup and they don't have one. I like when things align, and I'll pull the trigger because when everything's aligned, the probability is in my favor. A lot of people can't wait for that. They get trigger happy and they get into a trade that they shouldn't be in, and then they get hurt. not hurt. Well, if they get out, but they're taking a trade when it's not there. They're just maybe listening to someone because someone on Twitter or someone said, "Hey, this is bullish. It's going up," and then when a move's bullish, it usually goes down first, anyways, and then it makes its move. So
what's your self-talk when, say, there has been a lot of confluence for you to feel compelled to click the mouse for 3 days? What are you saying to yourself that keeps you patient?
I'm begging for my target to get hit. So if I have a downside target, I'm begging for that to get hit, which aligns with institutional. When that aligns with institutional buying, which we have on our site, where we have dark pools. When they align, I pull the trigger and I go in hard.
So what you tell yourself is, I'm going to let the market come to me, and it's okay if it doesn't, because eventually one will.
Yes.
So
you actually nailed it.
Yeah. So it's really about letting the market come to you to have your strategy, so you're not impulse trading. Open up your platform, go ahead. I think I'll try this. I think I'll try that. You already know in advance, and you're willing to wait. Tom Petty says the waiting's the hardest part. It's also probably the most lucrative thing you could do. You could make your broker rich or make yourself rich. So
well, I'll give you an example.
Do you walk away for, sometimes I'll just, I'll go to a longer time frame and, just stop watching it and go do something else.
Yes. Here's an example. I've been waiting for nat gas this level for, I'd say, about 2.5, 3 months. I've called lower nat gas, 204, 203 area for, I'd say, about since November. A lot of people have been buying from 240, 220. The squeeze is here, the squeeze is here, the squeeze is here. Just because there's a major, the biggest short position in nat gas, doesn't mean that it can't go lower. Just like there was the biggest position in volatility when they're shorting the VIX, it got killed. Now, you have to ask yourself, everybody says this is how stupid people, well, I shouldn't say it. This is where someone doesn't know what they're talking about. Here's an example. Biggest short position in nat gas, this is going to be a historic squeeze. That was at 220, 225.
Right. Okay. Yeah.
What do you think happens, Dale?
Yeah.
Everybody loads up call options. By the way, it's the London traders who push the gas market anyway that come with that information. They leak it out. So what they do is everybody starts saying retail is short. Do you honestly think retail is short nat gas at 220, at 210, 205? I don't know one trader that's short at that level.
Right.
The hedge funds are short because they know something. And what happened? It got killed. And I waited. And I got in at 202. I did. I took a little position. Then I went to 182, which was my target. I got in at 183. Got out at 195. A losing trade became a winning trade. Just managing your trade. So a lot of people, just because price got lower than where you bought, I have a cushion in my account. I feel sorry for people that don't. You shouldn't be trading if you don't have an account size. It's much harder for you.
Do you also reduce leverage on your first entry or your second entry? So it sounds like you scale in. How do you do it?
If I get in at a level where my charts are aligned for, basically, if I'm counter trending and it's and my charts are showing a retrace coming, I'll scale in, and that retrace comes. It usually tests an upper pivot, and then I get out. I get out on half and leave the rest for entry. But as I was saying, by waiting for the price to come to you, let's just say nat gas, which I'm bullish nat gas. I'm waiting for another dip, which is around 271. 171. Where I'm going to load up. If you do 1 or 2, 3 trades, 2 trades. Let's say I do 2 trades where you wait for a price that's just been smashed. The charts are set up, and you get in. And you make those 2 trades, and let's say nat gas gets 171, it fills, it gets back and tests 230, which I think it will. And then you make oil where I'm waiting for 47. Oil from 47 hits 56, 57. That right there, even if you did the ETF, you're looking at about a 35 to 40% gain. Those
Yeah.
2 trades in 1 year are good. Most
Yeah.
people can't even make 40% a year.
Yeah,
That just
they're buying all the hype of 1,000. You know, I want to ask you something. Dark pool block trades, I know they're there for equities. Are you getting dark pool block trades in currencies and commodities too?
Yeah, yeah.
Oh, okay.
Well, they like to hide their tracks, but I know
And
where they
they
hide.
do it in dark pools. That
Sure, they
stuff
do.
too.
They
Okay.
do it, but they trick you a lot too. But that's once again with experience, and it's funny. I'll see. I don't really want to get into it too much because it's kind of proprietary what we find. But
Okay.
there's patterns there. That's all I'll
Where do you
say.
find that information? Is it public? Dark
Yeah,
pool
you gotta get
block
it in.
trades?
Yeah, yeah, you get it. But we're the only ones that have them on charts. It helps when you visually see it on a chart than just the numbers being written in a spreadsheet or something. Because
Okay.
when it's on a chart and you see a big circle, it's like, whoa, it kind of opens your eyes like, wait a second, who did a trade of, $85 million here?
Yeah.
Who pumped in 150 million here, That's big money. And when you look at that, and when that aligns with targets of mine, very, very high probability that when it combines with my charts, then it's going to be in my favor. And I wait for a lot of those. I used to intraday trade a lot, Dale, and you know what? I did fairly well. I take a setup, I do 4 or 5 points, but the problem is I have a life too. I have a wife, and what I found was I'm starting to do more swing trades now because I like to enjoy my life now. I've worked hard for all my life, and you could sit at the screen and do intraday setups, make your 3, 4 points of 5 points here, lose here, lose here. At the end of the day, you made 3 points. One day you lose 5 points. In the end, it's a lot more work and it's a lot more stress. The way I
Okay.
look at it now is I fine tune myself where I wait a lot. I wait for the setup. Geez, one setup a month for me, I'm happy.
Yeah.
You don't
Yeah.
have to trade every day. And I see people that want it, and it reminds me of me back in the day where
Sure.
they want to get every setup. Well, I find them, you're intrigued. You want to prove to yourself, you know what you're doing, but this is money. People trade the bottom line. You don't trade for your ego. You trade because you're here to make money.
Or
Simple.
entertainment.
Or entertainment. I'm here to make money. That's
Yeah,
it.
you want entertainment, go see a show in Vegas.
Exactly. Like I don't care about gold. You're shorting gold or you're buying gold. Some people are so focused on gold. They're gold bugs. And I'm like, listen, if something ain't moving, you don't feel comfortable with it, you don't have to marry gold. Move on to something else. Right? There's
Yeah,
things I move on. I get frustrated with oil. I'm like, you know what? I'm done with the oil. You're pissing me off. Boom. Look for something else, And that's why I have so many screens. And my wife helps too, that looks for these setups because the more data I see, and I'm very comfortable with my strategy. A lot of the people on the forum now look for these setups as well. And I only have 2 eyes. When you have multiple people looking for this, there's a guy Michael on there putting bean oil setups. I love it. Soybean setups. So there's always a setup, and I only have 2 eyes. And whatever it is, if my chart's showing a buy or a short, a very high probability one, I'll take it. But it has to be there. It has to be set up. I don't just buy or sell anything if it's not set up for myself. A lot of people I find that have taken my course, I think they rush into trading, and I pound the table. Don't trade. You're new. Watch. Consider it like a tuition. You're studying to become a doctor, and you're going to operate on a patient in 2 weeks.
Yeah.
A lot of these guys in 2 weeks, they just want to get in.
What do you tell them? Most people, I think it's at least a 2 to 4 year period, like getting at least an undergrad degree in college. to, you know, really have breakthroughs and have, you know, made mistakes? And do you teach your people to journal what they're doing? Do you
Oh
tell them
yeah,
to journal?
yeah. The forum helps because I journal. I'll journal like patterns that worked,
Okay.
and I tell them you have to keep a history because you can't remember everything, right?
No, I
And
can't. What's your name again? So, you know, let me ask you this: on your forum, um, have you decided? Are you getting aggressive? You use the term "blow up" your service. Are you doing that? You said your website is closed, but it looks open to me, and I see you tweeting some things. And so I'm wondering where you at with your business. It looks like, you know, you have a pretty big team with you as well. So from what
I
I've
hope
seen on your website,
I'm to be.
go
I
ahead,
get a
be
lot of
honest.
messages. I've denied a lot of people. I'm probably the only one that's ever denied everyone.
But you
I
have,
vet people that come on.
but
I
you have a forum. There's
have
your
a
live
forum, but I
trading.
vet them. I just denied one
Okay.
yesterday. I don't like people that uh, have their own fun coming on my forum. The only reason being is, you know, if you have your own fun, then
They'll be soliciting your clients.
that too, but more. I find that a lot of these hedge funds don't even know what they're doing. Like
Okay.
I have, I think I have a couple on. I don't want to really point anybody out, but from what I've seen, I think they're more. I think more funds these days. They're more of sales agents instead of learning how to trade.
Okay.
Some of these guys just blow me away. I'm like, what the
Yeah.
hell
How
are
did
you
who?
talking about?
Yeah, you wouldn't give them 10K to manage?
No,
Okay, that's a key question anytime. So,
no.
Steve, anything you want to wrap it with about? Are you interested in people getting a hold of you? Tell me
Um,
about it.
I'm thinking, you know what? Every time I want to open, there's always something that comes up. I'm managing a fund that I started this January, this year with my family and a couple friends, and that's my main concern now. But I've always
Okay,
wanted a forum, but I will. I know everybody that's
all right, all
been
right.
messaging
So,
me. It will be up. It
it,
just will be up when I'm ready for it because I don't want a flood of emails.
yeah,
I don't have time to answer these emails. My money is made trading. My money's not made on subscriptions, and
okay,
everybody knows that. So,
okay.
you
So,
know, if you trade
so
and
please do not contact Steve at the Pivot King or follow him on Twitter. He's
you can follow me,
he.
but you know, a
Uh,
tweet only takes 5 minutes.
Oh, okay.
When you
So
have
you,
multiple emails, it's taking hours.
all right, you could follow Steve at the Pivot King. And Steve, coming from, I'm a Jap, a Jewish American prince. So from a prince to a king, may you have a great 2020. And, you know, I hope you find the time to teach as many people because the trading community needs people who talk sense and give people a real understanding of what the reality of this business is, and that you can't buy a secret. The secret is just hard work
Yeah,
and perseverance and living through adversity.
and your personality too. A lot of
Yeah,
people, their personalities could affect their trading. If you're
yeah,
a narcissist, you're egotistic,
yeah,
you're all, you're not going to be very good trading. That's for sure. If you
yeah. How
can't
about
take
it?
a loss, if you're,
Yeah,
if you, yeah,
everything's in there, and a lot of it's in our heads.
yeah, and a lot of
Yeah,
people, there's a disease out there where there's a lot of people. I know a couple of them. I'm not going to mention them, but where they lose $1 and they freak out, and
yeah.
you probably don't want to trade if you're in that sort of
There's no
disease.
law there.
You're
Yeah,
a multi-millionaire and you won't spend $2 on an espresso.
yeah. I
There's a
know what you
problem.
mean.
Yeah.
Yeah, look, yeah, I'll tell. I went to breakfast with a bunch of floor traders, and we walked through 20 below wind chill because there was a breakfast special, and they had 5-figure swings
Do
in
you
the first
understand what I?
hour. Yeah,
Yeah.
because
Yeah.
that's real money.
Yes. There's.
Breakfast is real money, not your account. Those are digits. So, I
And
know what you
always
mean.
give back. If you're doing well, I'm going to be doing something this year, a very big, probably on Christmas. I'm going to be doing a very big thing in Toronto. It's going to be on the news too. So look forward
Okay.
to that. Yeah, I'm
All
probably going
right.
to do a live video and everything. There's going to be
All
a
right.
couple of U-Haul trucks, and I'll be doing a series where I'll be going downtown Toronto giving away some things. But that's going to be fun. I have
Yeah.
someone on board in the government too that I'll be sponsoring something. So look out December in Toronto. It will
Okay.
be on the news as well.
Steve planting good seeds in Toronto. It
Oh,
was
it's going to be
great.
a really good one. I
Yeah.
look forward to it, actually. But anyway,
Thanks for your
we'll
time,
talk
Steve.
again. Dale, have a good day today trading.
Okay, buddy.
I'll be seeing you in person one day,
That'd be great to
hopefully.
break bread with you. All right, buddy.
And yeah, we'll go for breakfast.
All right, so here it is, guys. I made Steve a nice little commercial that he doesn't want because he doesn't want you to bother him except on Twitter. But here's his website, thebesttraders.com, Twitter handle @thePivotKing. And that's a wrap for us, everyone. Remember, don't just count your pips, count your blessings, and we'll be seeing everyone tomorrow. Thanks again, Steve.
Thank you, Dale. Take care.
You too.
Bye-bye.
Bye.